All right, everybody, what's up? It is Friday, June 26th, TGIF. Well, big down day in the market. I told you this was coming. Now, admittedly, I tend to be a little bit early when I see these things because what I do, and I've been trying to explain this to you, is very unique. I mean, I see the data on a real-time basis. I understand the importance of these flows that I follow, and these are posted daily. I have been talking about the slowdown and the deceleration in these tax flows. And by the way, I'll get into this, but let me just mention that next week we get the June job report, and these employment and withholding tax flows, they just continue to decline year over year. They're actually accelerating on the downside. So remember last month we had that surprise 2.5 million payroll gain for the May report? Well, you're definitely not going to see that. And right now they're talking about a 600,000 payroll loss. It could be a lot bigger than that. I mean, it could shock. These flows have just been going down, and I've been telling you guys about this, and this is a barometer of economic activity and the job market, and it is very negative. All right, the stock market, I told you this. Look, we caught the bottom in late March, early April. We rode it up, and then if you've been following me, you know I've been saying market's getting ahead of itself. Market's getting ahead of itself. And we just don't have the underlying economic. And now you throw on top of that new closures, okay? Texas today announced closures of bars, restaurants, and a spike in new coronavirus cases, a record daily increase throughout the country, in the aggregate. I mean, the market's in trouble here. We have to see the response by government, by Congress. But I want to go over a number of things. First of all, let me talk about something I spoke about yesterday. All this ridiculous Fed hysteria. They're juicing up the market. The Fed is juicing up the market. I told you. Every time you hear that, pretty much 9 times out of 10, you sell into that. Remember back on June 15th, I talked about this yesterday, how when the Fed said, they're going to buy corporate bonds, and everybody went crazy buying up the market. We are well below that level right now. I said back then that was ridiculous. And yesterday in my video I said, when they announced, they're going to relax the Volcker rule and the banks are going to meet their stress tests. No shit, they're going to meet their stress tests because they plan for that, man. And I mean, the Volcker rule, I said this yesterday, they're not going to be moving into highly speculative investments right now. And let me tell you something. Loans are contracting. Regular loans. That's the bank's bread and butter. You think they're going to go into highly speculative investments because the Volcker rule was relaxed when regular loans are contracting? And this is bad because I mentioned, I believe it was on Monday, maybe last Friday actually, or Monday in a video I did. And my subscribers get this information. You get it kind of secondhand watching my videos. If you want to get it firsthand, you got to sign up. I said that we finally saw the first increase in credit card and revolving credit loans in like 13 weeks in that last week. We saw a tiny little blip up, 600 million, and I said 600 million in terms of bank numbers, I mean, that's like a drop in the bucket. Banks have over 20 trillion in assets, so when you're talking about a 600 million increase in loans, I mean, that's ridiculous. Well, guess what? It contracted again this week. I just got the latest data. So that little tiny blip up in that previous week, that's gone. That's erased. We had a 3.5 billion contraction now in the latest week. Commercial and industrial loans. Biggest 1 week contraction ever, down 45.7 billion. I mean, these guys now have, the commercial and industrial loans have contracted almost 170 billion in the last 5 weeks. What does this mean? It means that balance sheet consolidation is ongoing with businesses and households. What is balance sheet consolidation? People paying down debt, either voluntarily or involuntarily, meaning banks may be cutting credit lines. It's bad news. Spending, personal consumption is the second biggest component in the economy. Business investment, obviously it's right up there too. It's like the third biggest after government spending. So the banking data looks bad again. It looks bad. And it's not even factoring in what's happening right now with the new cases of the virus. Now, the other thing I want to talk about is, getting back to they're juicing up the market. The Fed is juicing up. I mean, if you listen to these idiots, like, you really deserve to lose all your money. Like, where are they now? Remember the whole repo thing that happened last year, and it was all over that idiotic blog Zero Hedge? They're doing repos. They're doing 20 billion, 50 billion, 100 billion a day of repo. Repos right now, outstanding, 70 billion. You know what that is? That is the lowest figure since the Fed started this thing back on September 11, 2019. Nobody's talking. Where's this Zero Hedge talking about how the repos outstanding have shrunk down? Reserves, right? This is the so-called, they're printing money. They're juicing up the market. The reserves, they're printing money. They're putting money. No. Reserves in the past, since May 27th, what is that, a month basically, have fallen 380 billion. A reduction in 380 billion. I think reserves now are down to the lowest level in 3 months. Where's the juicing up the market now? All right? So you got that going on. All this is knowable. If you're not a lunatic, nut job, stuck inside some kind of crazy mythology from, that comes, I don't know, out of some primitive jungle tribe mentality somewhere. They're juicing up the market. The Fed is juicing up. Where are these guys? And I'm not talking about the super quacks, and you know who I mean by that. I mean, you got these guys working at legit Wall Street firms. I mean, I mentioned a guy. I did one of my podcasts. I spoke about one of these guys. Look, throwing his hands up in the air like, why bother? They're just, buying the market up. And I'm like, well, dude, if you know that to be true, then why don't you just get long the market? Like, they're still not doing it. And by the way, that's completely wrong anyway. As I've said a million bazillion times here, the Fed can lend, it cannot spend. There's no juicing up anything. If you want to talk about juicing up, the federal government could definitely, by the way, here's another thing I'll just let you know. As of yesterday, federal spending hit a new all-time record at 5.06 trillion. That exceeds last year's record of 5.03 trillion. And we still have 3 months left in the fiscal year. Now, ordinarily, that would be like super bullish. Super bullish. I mean, in a regular economy where things are not shut down, we'd be growing like 10%. But everything's shut down. So where's the money going? It's basically going into savings. I mean, it can't be spent. It can't be spent because things are still shut down. People are sick. People are out of work. They're getting checks. And here's where the really bad news comes in. Maybe it won't turn out to be that bad, but next month, a lot of these supports go away. All right, you got to pay your tax. Tax filing is due unless they change things. Now, they might. And if they do, I'm going to have to adjust. But right now, July, taxes are due. The moratoriums on rent payments and mortgage payments, that ends. You got to pay your rent. All of it, man. All the back rent and everything. Not just July. You got to pay March, April, May, June, July. Same thing with mortgages. The $600 supplementary per week unemployment benefits, that goes away. I mean, the market is not even paying attention to this. And this data If all that stuff happens next month, like, you know what the data is going to look like? I mean, it's going to look really bad. I mean, the potential here is for a new low below the March low. Now, I'm not calling that right now because things could change. I mean, Congress could pass a new stimulus. They could, Mnuchin could push the tax filings back to September or whatever. A lot of things could change. Like, I don't do, it's very hard to plan out in the medium term because you gotta think about policy. So we have to keep an eye on that. But I told you what was going to happen. The tax flow, there is no stability being seen whatsoever in the tax flows, which for me says the economy is just sliding back down again. We had a blip up, and that blip up was very modest. We saw it in some numbers like in May, maybe some of the June numbers, but that's over, man. So that's it. But I guess the thing I'm trying to say here is watch out for all that Fed hysteria. All right, my links in the description below. Sign up. Talk to you guys on Monday. Have a great week.